Hello everyone, welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForrestHodl. And in today's video, I'm going to be talking about the almost doubling of China's M1 money supply, what this means for global liquidity, and a connection back to the US having done this in 2020. And I'm going to be going through all the details and dispelling some of the just immediate shock that this might be, and getting into what my opinion is of what this means for Bitcoin and risk-on assets and global liquidity in general. Before I do that, however, there's just a quick little ad read from the sponsor. We'll get that out of the way, and we'll get into the video right after that. Today's video is brought to you by my good friends at the Bitcoin Way, the team who specializes in helping you become fully self-sovereign. The team has over 25 years of cybersecurity experience and offer the premier white glove service to walk you through proper 100% self-custody of your Bitcoin. It's absolutely critical that you are taking full control of your wealth and avoiding all counterparty risk of sharing keys with a third party. The Bitcoin Way will walk you through step by step exactly how to secure your Bitcoin, run your own node, manage UTXOs, and even tackle inheritance planning. The best part? They don't KYC you and never know the size of your Bitcoin stack, so you can learn to protect your wealth with complete privacy. The team can also help you upgrade your personal cybersecurity, set up a privacy phone, or even establish a Plan B residency. So, if freedom is what you desire, head over to thebitcoinway.com/forest or click the link in the description below to schedule a free 30-minute consultation with the Bitcoin Way. Don't delay. Your generational wealth depends on it. And again, that's the bitcoinway.com/forest, or just click the link below. All right, so I have this chart up here. This is pretty drastic looking, right? This is China's M1 money supply. You can see it's steadily gone up with slight little deviations. December to January, it's gone from roughly 66 or 67 trillion to 112.45 trillion. Now, a large part of this, actually the vast majority, is because of a redefining of what is included in M1 money supply in China. So first I'm going to explain what M1 is in China and then what they've included. So M1 is currency in circulation, which is also included in M0. And this includes physical cash, coins, and banknotes held by the public outside of banks. It excludes cash in bank vaults or with the Bank of China. M1 also includes corporate demand deposits, which are checking accounts or similar deposits held by businesses or institutions. And this can be withdrawn on demand. So this is highly liquid capital, basically. So that's how it's been for a long time. And they've included two more types of money in M1. And this is it. So residential, so personal demand deposits. So these are newly included. These are individual checking accounts or similarly instantly accessible deposits held by households. And China uses a lot of kind of these, instead of banks, they'll use like these all-in-one apps like WeChat. So WeChat, a lot of people hold a ton of money on there. They're highly liquid, and they use them as kind of like a checking account. There's also prepaid funds at non-bank payment institutes. So this includes WeChat Pay and Apple Pay. And this is kind of like a funded debit card or a funded credit card. And people will put money into these accounts on, say, Alipay, and then use that to make purchases. So that's a huge amount of capital. And what I've done here is I've kind of gotten an estimate from Grok, and they have... So they're going off of some older information, basically, and making an estimate of how much it will be from these two components, right? So M1 would jump, according to October data, which is what it's going off of to make this estimate, would have jumped from 63 trillion in January to 105. So that's an estimate, right? And it's going to have a little bit of margin of error depending on how much money is actually being held in these two new additions to M1. Now, what we can see by this chart is it didn't go to 105, it went to 112. So how much of that is monetary debasement, right? The reason that a lot of us are in Bitcoin is to avoid monetary debasement. We know what Bitcoin's issuance is. We know it has a max supply. That's very attractive as far as an asset goes. And we know that the digital scarcity is absolute, which we've never seen before, unlike the yuan, which can be printed at will by the Bank of China and the government. So what we can see here is it went from, instead of Grok's estimate at 63, it went from roughly 67, and instead of the estimate of 105, it went to 112. So there has been some additional monetary debasement, even from October to November, right, which was not data that Grok included. It went from 63 to 64, and then and then from November to December it went to 67. So there's been an incline after this slight decline here that we can see throughout maybe from the beginning of last year until October, but now we're starting to incline, and then we see this drastic spike, and a lot of it can be explained by the change of definitions. But within there, right, whenever there's a change of definitions, it also allows a little bit of flexibility, perhaps, for some debasement to go unnoticed or to be explained by this, right? And China's M1 is going to be included in global M1. So if you look at global M1, it's going to all of a sudden spike up a lot as well. Not as much as this, of course, because it takes in all of the other nations out there and the money supplies of their M1. And but there could be, this could basically, what this can do is this can kind of skew some of this information, and it can be used intentionally to skew the information so that monetary debasement can go relatively unnoticed and the currency won't necessarily fall as much. Now, if we go to US M1 money supply, we can see a very similar story. This is incredibly interesting how similar this is. From February 2020, we can see, an increase into March, and we can see an increase into April, and then a definition change of what M1 is, basically takes it from, let's say, 4.7 trillion all the way up to 16 trillion. So 4 times as much with a definition change. And what else can we say happened in 2020 in these few months, right? The reason we saw monetary debasement start to happen in March and even February, March, and April was because of shutdowns, lockdowns, and these basically, parachute dropments of stimulus and all the money printing that needed to happen to keep all of these businesses afloat. So there was a huge amount of stimulus, a huge amount of monetary debasement, and all of a sudden there's a definition change in the US that makes it very hard to track how much debasement there really was. And then we see steady inclining up until the peak here, which was April 2022. So 2 years of steady inclining, right? If we kind of take this out, we can see that, maybe it'd be around here or something with some of this monetary debasement and with this definition kind of masking some of the debasement potentially. We can see money actually got sucked out of the system in the US and bottomed roughly a few months ago here, maybe in August, and is starting to incline again, starting to go up. So what I suspect is happening in China, and of course this is in part speculation, I suspect that China is doing something very similar, that they are wanting to debase their currency because of a few different reasons, right? They want to add liquidity into their markets so that their stocks will go up. And this is kind of, monetary easing, which makes lending easier, which makes businesses able to stay solvent when otherwise they shouldn't. And the other thing that it does is it pushes asset prices up. And the big thing that it does as well is it lowers the value of the currency. Now, this could have even been done in part, the few months of M1 increasing here from October onward in China could be done in fears, right? Because what happened in the month, what happened in November, right, is that Trump won, right? Trump won his the election, right? He's going to be made president. He previously had talked about tariffs like crazy, knowing that the main sort of tariff affected country would be China, as a huge amount of their economy is based off of exporting to America. What China would want to do to combat that, as well as negotiate with the US government, would one thing they could do is debase their currency. So this means that the same amount of US dollars could get more yuan, right? Because they've debased against the US dollar. And what this does is this makes the Chinese exports more competitive. It makes labor and manufacturing in China more competitive for the American, for people earning American dollars. Businesses, corporations, all these kind of things can still get cheaper products in China if China debases their currency. So this could be a way for China to deal with some of the tariffs. And this could be a reactionary or a pre-reactionary increase in monetary debasement to deal with the tariffs. And they've had, some real estate collapses. They've had, some struggle within their economy, slower growth, all of this. What they try to do in those times is to inflate their currency to deal with the potential, deflation that they could head into as an economy as far as growth goes. So it's like adding a little, it's like drinking an extra cup of coffee to deal with the lack of sleep that you've had, right? That's what these central bankers are trying to do. They're trying to stimulate the economy by shoving a bunch of capital, quick money into the system, which M1 is very liquid, very accessible capital by consumers and businesses. So I think this is to mask the truth here. I think that we will see something very similar to what happened in 2020 in the US, which is after this kind of redefinition of what M1 is, we still see a steady incline of monetary debasement of the Chinese yuan. And we are starting to see that in the US dollar as well, which drives a lot of the market, and a lot of other countries' currencies are, informally pegged to the US dollar. So they have to increase, debasement of their own currency to stay within the ranges of what the conversion to US is, and all these kind of things, right? So this is, I think, a bigger story than people think. Of course, it's very jarring to see this here. Whoa, this is a huge amount of debasement. And then you see, okay, well, this is just a change in the definition. So it's not debasement. I think there's actually a big gray area within there. Yes, it is a change of definition. Yes, there is monetary debasement happening, and these two things get mushed together and it becomes hard to see. So that's what I believe is happening. I think China is turning on the money printers. They're changing the definitions to hide that slightly, and I think that we're just going to see this continue to go up. That's about all I have here on this information. Again, this is to be interpreted. All these charts, every chart you look at should be interpreted through your own eyes. There's no absolute way to determine what's going to happen from one chart alone. The economy is as complex as a human brain, so it's very difficult to map, and it's very difficult to know if this is good or bad for Bitcoin. In my eyes, everything is good for Bitcoin. In my eyes, this is monetary debasement, and that is the reason many are into Bitcoin. And liquidity has to flow somewhere, and a lot of that will get sucked up by Bitcoin. So in my opinion, this is good for Bitcoin's price and Bitcoin adoption. However, there's lots of other things happening right around the world. And we can see there's a lot of economies starting to struggle. How long can they keep kicking the can down the some efficiency happening within the US government. Again, so there's all sorts of things, and you kind of have to build a mental map and start combining all these things. So you can't just say, oh, wow, okay, the M1 in China's gone up, that means Bitcoin's going up. It's part of the story, and we have to build that story out and understand it. And of course, none of this really matters in the long term if you just hold Bitcoin in cold storage, if you protect it with some seed plates, like using my coupon code BTC not crypto, shameless plug, for Stampseed. If you buy Bitcoin, hold it self-custody, and you can do that through Bitcoin Well. You can get some free Bitcoin using my link in the description and my referral code Bitcoinnotcrypto, of course. And all of that goes to support this show, goes to me researching more and being able to create more videos for you. So I appreciate that. Thank you all for watching, and we'll see you on the next episode of Bitcoin Not Crypto.